Odesola Sumoni, research analyst with Financial Derivatives Company, is live with me in the studio. Good morning, Desola. Well, I don't know. Borders are being shut against UK. Who let you into this country, for goodness sake? What are you doing here?
Came to say hello.
They shouldn't have let you because of this new strain of virus. Anyway, it's good to see you. Now, looking at what is happening in the UK, kind of a double whammy for the UK government, facing with no deal, Brexit talk, and of course we have this new strain of virus, not just in the UK, but then here in Africa, South Africa. So what's the implication of this for trade, particularly as this AfCFTA is about to take off?
Thank you for that question, Chimis, and it's good to see you. And I've had 4 tests in the past 1 week, and they are negative.
Interesting.
So regarding trade, just Monday, yes, the president of France, Emmanuel Macron, announced that, you know, the border, there's 2 land borders, important land borders leading to the UK, border of Dover and Calais, were closed to trade. So we've seen a lot of trucks and lorries carrying fresh produce stock on either side of the border, and that border is very important. Those borders are very important because they account for around 20% of total British trade with the EU, and particularly for fresh produce. So each hour that this lorry spend on the road is money that is being lost. And top grocers in the UK, Tesco's and Sainsbury's, have said that although they have sufficient stock to last up in the run-up to Christmas, that if this closure remains, that some items may come out of stock. Now, regarding the AfCFTA, I think one of the core principles of the AfCFTA is free movement of goods and services across borders. And with the new strain of this coronavirus pandemic in South Africa and the rising cases in Lagos and the restrictions and the attendant lockdowns, I think that it may delay the implementation a little bit. They may delay the implementation of the AfCFTA.
You think so? Maybe. The Secretary General was on this show, and he was, you know, it's sacrosanct that this has to take off January 1.
Yes, it's happening January 1, but people are on lockdown. So still trade activities would be limited. So that's what I mean, yeah.
Now, okay, still talking about this new variant of the virus, we've seen oil take a hit. So what's the outlook for the global oil markets going into 2021, even though we're seeing vaccine on the horizon?
So oil has had a very volatile year. Started the year on the high, $65 per barrel. Then at the start of the coronavirus pandemic, you know, Russia and Saudi Arabia were flexing their muscle. We had some price wars. We saw oil decline to about $10 per barrel. WTI was even negative. And then with the news of the vaccine, we saw oil rise up again, reaching as high as $52 per barrel. Then we had the second strand, give oil a beating again. So I think that this new strand, I think, is going to, you know, reduce international travels and is going to delay the recovery we expect in global oil demand, which is also going to have an implication on economic recovery. So overall, I think that while the news of the vaccine is bullish, I think we have significant downside risk, and one of them, the key one, is this this new strand of coronavirus pandemic and OPEC's new limited increases in production output.
Now, yeah, where does this now, with this situation, where does it leave OPEC and its production cuts?
I think that first of all, when OPEC announced that they would increase production by 500,000 barrels per day starting January 1, we did not know about this second strand of the coronavirus. So I think that they are closely watching the market, and OPEC is going to adjust their production in line with the market reality. Because already the monthly oil market reports from OPEC for this month of December, it shows that OPEC has revised downwards the oil demand for next year, and that did not even take cognizance of this new strand. So I think that OPEC is going to move in line with what is happening in the oil markets.
Now, yesterday, the National Assembly passed the 2021 budget, and we have the benchmark price at $40 per barrel, a production of 1.86 million barrels per day. Should Nigeria really be worried about this trend in the global oil market?
Well, as an oil exporter, Nigeria should be worried about developments in the oil market. And this development, like I said, it has a potential to limit oil price gains, particularly because of the lockdowns across countries. If more and more countries are going on lockdown, that's going to have significant implications for global travels and as well as domestic travel, which is going to, reduce oil demand growth. So I think Nigeria should not be worried too much, because the consensus of forecast is that oil prices would not go below $40 per barrel next year. I mean, the average is about $45 per barrel. Even Goldman Sachs were very, very bullish. They forecast around $65 per barrel for next year, citing, the vaccine. But what we are seeing is also there's some form of vaccine apathy. Like, people are suspicious about, side effects of the vaccine, because they feel like the vaccine came out too quickly. So I think all those factors are going to affect oil prices going forward.
Yeah, still talking about the implications. Now, we've seen FAT disbursement declining, even though, marginally for now. So what next?
I'll say that one of the positives of the pandemic was that it forced states to look inward, because of these oil price shocks are now becoming more and more persistent. We had one just 2016, 2017. Now we're having one again. So it's forcing state governments to look inwards, to look at how they can generate more internally generated revenue. As a matter of fact, the World Bank loan of $1.5 billion disbursed, I think, last week or 2 weeks ago.
No, last week.
A good part of it was to improve the fiscal sustainability of the state government. So I think that following this trend, I think that state governments are going to try to, we've been talking about this diversification forever,
Absolutely.
but we'll keep talking about it until we eventually get there.
Yeah, so. Talking about looking inwards and, yes, the issue of diversification. I just had a conversation on this issue of border reopening. I'm sure you were listening. Mr. Onose was very angry. He doesn't like the fact that these borders are being reopened because of the agriculture. You guys always come up with your inflation forecast. We've seen what's happening with food, inflation, and all of that. Do you think he is right to say, look, this border reopening is not good for the agricultural sector?
I'll give you our view. We believe that it is positive because, like you said, food inflation for November was 18.3%. And why? Because of... Okay, let's backtrack a little bit. So the border closure, it helped a little bit. Anecdotal evidence suggests that crop production increased, but it did not increase enough. It increased as much as it could, given everything, except, we now begin to, farm more land, change our processes, use more plants or seeds that have higher yield. That's when our production will increase more significantly. So why Mr. Onosoya was upset was because, now they're going to get less bang for their buck. Because of the floodgates have been opened now, prices are going to be depressed a little bit. Prices are going to be depressed, and it is not positive for them because now they get less money for their
Yeah,
produce.
because we're seeing even the so-called local rice is very expensive.
Yeah, like you said, cost of production in Nigeria we still have binding infrastructure constraints, and even if they close the border for 5 years, I still think that, except
he's asking for 5 years. Can you imagine that?
Yeah.
Okay. All right. Now, we're in festive season. Now, according to a recent report by the NBS, intra-city travel in Lagos has increased 73.8% year-on-year, while intercity travel is up 36.4% year-on-year. Now, what is the effect of this on domestic travels for Christmas and, of course, for food prices?
Let me take you back to Econ 101. So in economics, we know there's something about elasticities, which is essentially how does your demand change, how sensitive is demand to changes in price. So studies have shown that travel is price elastic, particularly traveling for leisure, and Christmas travel is literally traveling for leisure. So because of, prices have increased sharply for many reasons compared to last year, we are seeing less people travel. Also, because of the year has not been very good economically, a lot of people lost their jobs, reduced income. So the spending power, also with inflation currently about 15%, I think inflation has also eaten into people's real income. So there's less money to flex. So people are not traveling, one, because of higher costs, and two, there's less money to spend. Secondly, regarding with domestic commodity prices, I think that because of logistic cost of transporting cost of transporting goods from the north down here is higher, I think that would also keep inflation prices a little bit elevated, or it would reduce the reduction. No, what's the better word now? It would weigh on prices, even as border opening is reducing prices. I think that the cost of transportation will reduce how far prices can go. Okay,
let's look at the currency market, because that's also tied to the commodities. Now, around this time of the year, we know that the Naira rallies at around, in the parallel market due to visiting relatives and friends. However, this year, the Naira has remained relatively flat. As of yesterday, 477 to the dollar.
Yeah.
What could be responsible, for this development? Would you say is that perhaps the diaspora remittance policy just recently introduced by the central bank?
Okay, so again, a little bit of context. Before now, if I as a migrant sent money to my parents through the official means, they would be paid in Naira. But with this new policy, and the exchange rates will be determined between the IMTOs and the banks. So, but with this new diaspora remittance policy, the recipient of the money will receive it in foreign currency or in cash, either in their domiciliary account or in cash, which I think is positive for the foreign exchange market, and that is supporting the exchange rates currently at the parallel market. Because now I know that if I send my daddy £100, he's going to get £100, not the Naira equivalent at whatever exchange rate, which may not be favorable. So that is helping. Regarding the visiting friends and relatives, like you know how this year has been, people are not traveling because of travel restrictions. In fact, I have had to cut my trip short. I'm jumping on the next flight out of Nigeria tomorrow.
Before you get locked down.
If I get locked down, yes.
All right, so what's your outlook for the Naira, looking at, some of the policies that have been put in place?
I think going forward, I expect that for Q1 2021, I think the Naira would appreciate in Q1 2021, first of all, because of, this new policy. Then we have this disbursement of this loan by the World Bank. So I think those factors will support the Naira. I think also the Naira would converge towards, the parallel market will converge towards the official market, but they would not unify. And towards the end of the year, I think also because of the weak economic fundamentals, we may see currency adjustments.
Okay. Now, while we see that appreciation in Naira, the equity is also seeing good bubble there. Santa rallies seem to be there now. So what is your outlook for that market?
So what we are seeing now is typical around this time of the year, the Santa rally. People are bargain hunting, cherry picking. But in addition to that, because of a policy introduced by the central bank late last year, there's a lot of maturing treasury bills. Around, I think for December, we have about 1.8 billion treasury bills maturing, and there's nowhere for this money to go. So part of where they're going to is in equities market. I've seen some sectors like the telcos, construction, insurance sectors, and banking sectors increase quite sharply as a result of money moving into. But there's no fundamentals to support it. So we expect that while this rally is going on, we are expecting a correction quite shortly.
But definitely not before the end of the year, because this Santa has to remain in the market. I keep saying that, Desola. I keep saying that. Anyway, Eddie, of course, will give us the update.
Yes.
Yeah. We'll be back in a moment.